Good morning, everybody, and thank you for joining Hazer Group's investor webinar this morning. Presenting on the call today is Corrie, Hazer's Managing Director and CEO, and Mark Edwards, Hazer's Chief Operations Officer. Glenn will shortly give a presentation and an overview of Hazer's strategic priorities over the next 12 months, specifically pertaining to recent progress on the commercial demonstration plant. If you would like to ask a question, please do so using the Q&A button facility at the bottom of your screen, and we will answer as many of those as we can at the end of the webinar. So for now, I'll hand over to Glenn to begin. Thanks, Glenn.
Thanks, Hannah. Good morning, everyone, and welcome to our webinar. Thanks for joining the call today. I'm joined on the call by our Chief Operating Officer, Mark Edwards, as Hannah said. If you're a regular follower of Hazer, you'll know that we try to hold webinars quarterly or around particular events to keep shareholders updated on our progress. This time around, we'd like to focus on two particular topics: our commercial demonstration plant. We put out a CDP update on the 31st of July, a couple of weeks ago. The project and the schedule has now been significantly de-risked. The replacement heat exchanger and the hot reactor equipment have now progressed beyond previous points of failure, enabling the delivery and the installation of this hot equipment, and that will facilitate the early commissioning of the CDP in Q3 and Q4 of this year. In addition to that, with the CDP coming up online and just around the corner, we also want to briefly describe how we're going to leverage that and our CDP into our commercialization strategy post-startup, and Mark will talk to this very shortly. Secondly, a corporate update, in particular the details of our rights issue, which is open at the moment. Our prospectus is out. You should have received that either in the mail or through email. If you haven't, we'll give you some details on how to receive that shortly. Look, we think it's a really attractive offer to existing and eligible shareholders to consider. We've got a really exciting 6 to 12 months ahead of us to look forward to. Our CDP is coming online, our growth portfolio is maturing, and we expect this to unlock further value in our technology. A brief word on strategy. Look, our strategy is on track. We've set out to commercialize, to scale up and grow our technology, and that's what we're doing. Climate change, of course, poses a serious threat to our planet, and Hazer is very well positioned as a serious solution with our world-first climate technology, which is disruptive, that will play a leading role in global decarbonisation faster than any available hydrogen technology today. I'll just jump down to this commercial demonstration plant. Before I hand it over to Mark, our CDP is critical. It's an important component of our scale-up and our commercialization strategy. To recap, we've successfully scaled up our technology now a number of times. The CDP is our 5th scale-up, so a very advanced technology. It's capable of producing up to 100 tonnes per annum of hydrogen. At our CDP, we've got the added benefit of using biogas as a feedstock, which does result in a carbon negative footprint. The main objective of our CDP is continuous operation at a commercial and industrial scale. And following the performance testing of our reactor technologies, we're confident that we'll be capable of then scaling up for commercial deployment in the projects that we've been public about and future projects that are currently in our pipeline. Mark, this is a good time to hand over to you for a more detailed update on the progress of our CDP.
Yep, great. Thanks, Glenn. So last month, as Glenn mentioned, we passed the point of previous failures in the MK1 reactor and heater fabrication process, well beyond that. And this really is a significant milestone as we've crossed the most difficult part of the fabrication process in that long progression that we've had, which really means we're in the low risk part to completion, and it's really quite exciting for the team. It's been a lot of hard work over the 12 months since we had that situation, and to see the equipment come together now. We've got the heat exchangers booked in at the end of this week, where they'll be coming to site to install, and we've seen the MK1 barrels are welded together, all the parts are assembled and prepared with putting it together. So we're really in the last few pieces that we need, which is why now we've got very confident for the RFSU at this point, and now we're just planning ahead for the commissioning and making sure that goes smoothly. The timing is good as well. The equipment, things are lining up on the work fronts well, because the hot piping we've also got is the connectors. It's halfway through fabrication. They'll all arrive at the end of the month, just in time as the heat exchangers go in. So should be pretty seamless. And then we can start have all the connections and the heat exchangers in ahead of the reactor arriving. So really the progress now is coming to completion quite rapidly. So we'll probably have another update fairly soon to give you that that next milestone. And one of our risk mitigation strategies has paid off. We decided to install the furnace early. A large part of the commissioning work that we would have done towards the end of the year is all the difficult electrical work and controls associated with that furnace. That's been installed, and we've finished everything on that, already started pre-commissioning it, which gives us time to debug any issues that we find, and that's a large part of that commissioning work that we can have out of the way before the reactor gets there. So again, de-risking the RFSU process, and that actually helps for faster commissioning. So that's going well. Next slide, thanks, Glenn. Yeah, so Glenn sort of summarised the purpose that we have for this CDP. It's a very important tool for us, and there's three key areas there that I'll just elaborate a little more on. Firstly, we need to get the operating data and information, all the technical information out of the plant, beyond what we've already obtained from the current lab scale and pilot plants. This includes operating the plant in a continuous mode and establishing some reliability. So that's for us to have a look at the equipment that we're using, how well it works, how to operate the equipment and maintain that process consistency, which then feeds into tweaking the design and the commercial plant, which we've already working on at the moment. The second part is to validate and understand the scale-up data for the larger reactor. So the previous reactors are a little small for the commercial size. So this intermediate step is large enough that we'll get the data we need to get the confidence for determining the right size and production rate, and that then flows on to being able to size the commercial plant correctly to get all the process data right. So this information we've already started feeding into the likes of the Canadian project and the other projects. I mean, this is part of developing Chubu and the Onji, but for that well-advanced design that we've got in the 2,500 tonne per annum plant, the data that we've got to date out of the plant, out of the previous work, is already in that design, but part of running the CDP is it enables us to validate those sort of last design assumptions and I guess extrapolation that we've done out of the smaller reactor, which then gives us that certainty in the design. And the third part there that we will get out of the CDP is to produce some large amount of graphite. We've already been doing industry application testing over the years. We've been able to give out small samples from our pilot plant, and those that want to progress, and we've had very good results with some of those. Interested parties are asking for tons of material, and we just don't have that sort of inventory. So part of the CDP is to generate that graphite for this industry application testing. We've got some that are already waiting, and the rest that we can stockpile as we develop the graphite applications with our US University of Sydney team. Then we'll have some available on hand, and we've got some storage space available just to keep that on the side for later. And I think over the course of the next few years, there'll be various things that will come out of those projects that we, design concerns or different gas streams or qualities, things, pollutants that might be in the gas that the projects will raise, and the CDP forms an important part of being able to quickly test that and then have certainty on the design to de-risk those projects. So certainly a very valuable tool, and we'll get a lot of a massive amount of information and certainty over the next few years by operating this plant. Thanks, Glenn.
Perfect. Thanks, Mark. So just turning then to our corporate overview, again, just wanted to reiterate where we are with our key activities. We've got a pretty busy 12 to 18 months ahead of us, a bunch of what we consider really positive milestones and catalysts. As Mark mentioned, on the commercial demonstration plant, we're reiterating our guidance that the CDP is on track for a startup of this year. We've got milestones along the way, as we had, I guess, a couple of weeks ago. We've got installation milestones. We've got what we call mechanical completion, which is where all of the equipment will be installed, and then we'll start and move into the commissioning phase in late September into October. Secondly, on our project in Canada, look, Canada is a really attractive market. It's very low gas prices. We've got very cheap power and also very green power, very supportive governments, and all of that, low cost gas and power also drives very attractive economics for potential customers of our technology. So it's a really strategic market. The engineering work for our reactor and also the balance of plant in Canada is on track, and that comes to a close very shortly. So we'll be able to come out and give some more details on the complete design package for a Canadian project. And alongside that, just building on our announcement of a few weeks ago, we're in the midst of identifying and assessing new site locations and possibly new partnerships as well on our Canada project. So something to really look forward to as we drive towards a final investment decision on that project. New projects, again, we're pleased to have announced a couple of months back two really exciting projects, one in Japan and one in Europe with Engie in France. Leading partners, leading markets. And these are, again, transactions that demonstrate that we're executing strategy, again, endorsement and validation of the technology, pre and post CDP. And behind all that, our pipeline is very deep. We continue to work with potential customers in all of our target markets of North America, Europe, and in Asia, and obviously offer up a pretty competitive technology relative to steam methane reforming or even electrolyzers. On Mitsui, as Mark briefly mentioned, on our graphite side, we continue to work very closely with Mitsui. This relationship is consolidating even further. We see a lot of interest in Hazer graphite. As Mark mentioned, we've only been able to, up until this point, provide small scale samples. Post CDP will provide larger scale samples so that potential buyers of graphite can do their testing. All of the testing that's been done to date has been very encouraging, and it's really identified potential application in areas that we really didn't anticipate. High volume, potentially high value markets like steel making and iron making, where we could be replacing coke and coal or even contributing to the overall green steel making initiative. So it's a pretty exciting component of our technology, a real kicker to the potential value of it as well, alongside the hydrogen. And I've always said it's one technology that serves three markets: the hydrogen market, the graphite market, and of course the overall decarbonisation market. On the graphite, of course, our end game is the marketing and the offtake, and we're continuing to pursue this aggressively. Corporately, we'll continue to try and get more runs on the board. We've had a pretty good run this year in terms of grant funding from ARENA and our R&D rebate earlier this year. We expect further milestones on ARENA, our government funding grant. That'll be ticked off as we move into the commissioning phase of our CDP. And of course, more R&D refund due throughout the course of the new financial year. So this will further shore up our liquidity and maintain our robust and flexible funding position. We've put our share price performance in just to really show kind of the journey we've been on over the past call it 2 to 3 years. And look, clearly I'll acknowledge here that we're not where we want to be. And that said, we've made significant progress over the last 9 to 12 months, in particular on the CDP and the growth portfolio. You can see the positive performance that we've demonstrated on that front. And look, it's not necessarily been reflected in the share price. If you look at where we've been over the past 2 or 3 years, we are currently trading at one of the lowest points in our history. So we're looking forward to kind of bringing that CDP online and giving investors and shareholders an uplift from that inflection point. We did experience some delays, as Mark mentioned, back in the early parts of 2022 and mid-2022. We've worked really hard to resolve those. The July announcement again signifies that all of the great progress we've made on the CDP and bringing that back on track to maintain our 2023 target startup. And it is a really important inflection point as we bring that up to first hydrogen and first graphite. Again, the 3 really important deals in the interim, again, representing further endorsement and the validation of our technology. And it is worth mentioning that the last raise of the company was back in September of 2021. That's almost 2 years ago. That's a long period of time for a pre-revenue venture undertaking a capital project. So we've had the benefit of a strong R&D refund and rebate, and also ARENA government funding. As a company, we'll continue to focus on delivering the underlying business, and we'd expect thereafter the share price to perform. And if you're not aware, we've got currently 3 analysts that cover the stock. I think the average target price for all of those reports is around the $1.50 to $1.65 a share mark. Just a brief update on our rights issue. You will have seen that we've launched our rights offer on the 31st of July to raise up to $15 million thereabouts, principally to expedite our CDP operations post-startup and advance our commercialization plans. The offer is, of course, still open. It's 3 new shares for every 16 shares that are held on the record date. In addition to that, we're attaching on a 1-for-2 basis an option, which has an exercise price of 75 cents per share. And we're seeking to have that option quoted so that it can be traded on the ASX. The offer is priced at 48 cents a share. I think as of yesterday, that was still trading. We were still trading around 8 to 10% above the offer price. We don't necessarily like the price that it is at, but that said, it is attractively priced. And that's why we're offering it up to existing shareholders to enable all of us to participate in the next phase of growth. It's also worth mentioning here that shareholders are also able to take up any stock in addition to their entitlement. So there is a short-form application, and that again is prioritizing our offering to existing shareholders. It's partially underwritten. We've got $6 million already secured. All of the directors are also taking up their full entitlement. In fact, a number of directors are also underwriting above their entitlement. And as I said in the beginning, if you haven't received your documentation, either in the mail or via email, then please urgently reach out to the registry office. I think there is another announcement this morning with the full details of Atomic's contact, phone number and email if that's required. So I understand that some of you haven't received the paperwork, then please reach out to Atomic directly. In terms of use of proceeds, this is growth capital. The CDP is around the corner now, and we've turned to think about the next phase of growth. The use of proceeds is to expedite the CDP operations post-startup and advance Hazer's commercialization plans. There's 3 core components to the uses: to drive the operational performance and the testing of the CDP post-startup, accelerate our current commercial projects and unlock further global opportunities, and thirdly, prepare the technology for commercial scale-up and R&D. At this stage, again reiterate that the capital of the CDP is covered, and this is capital that's going to be used post the startup of the CDP in the 3rd and 4th quarter of this year. We had a question earlier, why now? Look, we're a pre-revenue company. We've always had a raise in the plan over the course of the next 6 to 12 months. We always want to be ahead of the funding. Internally, we always set minimum liquidity thresholds to manage our business, being pre-revenue, of course. We have in the past received a sizable R&D refund, which at the same time, we took the opportunity to clean up some legacy balance sheet debt, which you will have seen. And so we're going into the next phase with a very strong balance sheet. It's why we're offering this up to existing investors at an attractive price, so that you can participate in the growth of the company. And we'll continue, of course, as a leadership team and a board to be prudent about how we think about the funding of the company. There's the timeline. Again, I think the dates worth calling out is, I think today was the last day to extend the rights. There's no reason to do that, so we're pushing on. The offer closes on the 18th of August for all eligible shareholders. And again, if you haven't received your docs, then please reach out to Tom. I'd like to leave it there and open up the call for questions, if I may. Hannah, I think if I can just close by saying our technology, again, is very disruptive to the hydrogen industry. We're very uniquely positioned as a low-cost, low-emissions proprietary technology that produces hydrogen as well as graphite, and that's been attractive to Tier 1 partners in a lot of developing as well as developed markets. We've got a really exciting period ahead. It's probably the most exciting period in the company's history, and we're looking forward to delivering and driving forward our strategy. So thank you to all shareholders for your support. And I think, Hannah, that's a great place to open up for Q&A.
Thanks, Glenn. Yep. Again, if you do want to ask a question, please use the Q&A button at the bottom of your screen, and we'll get to as many as we possibly can today. If we don't get to answer your question today due to time constraints, please don't worry. We will come back to you as soon as possible on the email. So Glenn, we do have a few. What happened with Suncor and how much does this delay development? I think this one might be for you, Mark.
Yes, okay. So Suncor has decided to strategically pull back to their core business, and these sort of projects is not in their core, and it really was a company decision that they decided to close a lot of their projects that were expanding into these kind of future technologies. But it's really opened an opportunity. There's a 3-partner project is always complicated, and for Fortis, this project was generated by Suncor, and Fortis actually have been very positive and said, actually, we want to relook at this project and how they want to do it, because in a 2-part project where we're the technology provider and they can be the owner operator, it makes it very simple, and it actually simplifies the approval process. So we're just reassessing now how we would do this project. So we think that it's actually got a lot of benefits. So it's not something that we look as a negative now that we've had time to reassess. We think it's an opportunity to execute the project in a much simpler fashion.
Yeah, and Hannah and Mark, if I may just add on that front, look, it's a corporate pivot by Suncor to move back into conventional oil and gas projects. We see that across the board at the moment. A lot of the large oil and gas companies are doing the same with oil prices at $80 or $90 a barrel. As Mark said, it simplifies down the project. Look, Fortis are a very large utility, and they bring a lot to this project. They supply the gas. They also will be the off-taker of the hydrogen and possibly the graphite. So I think with a smaller project, at least from a partnership perspective, this is going to be simplified down. We've had a lot of engagement with Fortis over the last few weeks to reframe the project. We've moved FID slightly out to kind of accommodate a bit more space to find a new site. We're assessing new sites, potentially new partners as well, that I think is going to add a lot of value to this project. So as I've said, it's a strategic market for us, low-cost gas, low-cost power, very green power, so very large carbon footprint for a project like this, and you know, an extremely valuable application to use hydrogen in the pipeline network in Canada.
All right, thanks, Glenn. A few others here. Is the graphite suitable for EV batteries?
Yeah, it can be. I can see that as well, David. Thanks for the question. Can be. I think one thing coming out of all of the work we've done on our graphite is a very wide-ranging application. It's very versatile. It's quite pure graphite, and we have the benefit of having an ion inclusion in it. So a really broad application of uses for graphite. It's been tested in a lot of applications. It's been tested in EV batteries. It's been tested in battery technology, thermal energy storage, steel making, iron making, water purification. So we're excited about what the graphite can deliver. EV battery scale of market is not necessarily large. We tend to like other areas as well that offer a much larger demand, as well as a, you know, potentially also a higher value market. So steel making is one of those that we have, that we are focused on. I see another question here from Roger in respect of coking coal. And I think you're spot on, Roger. A lot of the steel makers have tested our graphite and seen potential performance benefits in using it in the blast furnace, but as well as in the electric arc furnace. So these are all avenues that we're exploring. We have potentially a large volume of graphite that we can sell into the market. And I think by the time we get our CDP and as well as our other projects up online, we'll have a number of markets locked away. Mark, did you want to add to that in respect of the graphite?
Yeah, I think, no, that was a good summary. I mean, just answering that battery, you know, we've done battery testing that had proved that we compete very well with current commercial application, but it's a long road to break into that market, smaller volumes, very high value, but it's more, we're focused on the easy targets for now, and we will pursue that in parallel, because that's something that, you know, takes years of testing and proving to get the confidence for them to switch over. I mean, once you get into the market, then you know, it's hard to also be taken out. But we will develop that in parallel. At the moment, it's the low-hanging fruit that we're looking at.
All right, thank you both. Another question: where do you see short-term shareholder value coming from? The CDP looks more like a proof of concept. Having design assumptions at this stage means there is likely to be further risk of delays.
Yep, I see that question. Thanks, David. Look, we're beyond proof of concept. We've scaled this technology up now 4 times. We're in our 5th scale up. So we've been at this 15 years. It's been a very valuable journey that we've been on to continuously scale up to industrial scale. The CDP, its objective is very clear: demonstrate the technology on a continuous basis. It's the first time we're doing that, and preparing it for commercial rollout. So it will take us to a very advanced technology readiness level, and that's the tipping point for the technology to move into the commercialization phase. We've spent $70 million developing this technology. It's no small amount of money to get to a pre-commercialization phase. So we are very excited about the next phase in terms of value inflection points. The next one is coming very shortly, and that is the CDP, and it's coming online. As Mark said, we reiterate our guidance on that. We've substantially de-risked the schedule, having passed now the previous points of failure of some of the equipment in the past. It's been done because we've had a rigorous schedule, a rigorous project management process around that, and some of the world's best people working on this schedule and this technology. It's a really exciting place to be. The confidence levels are building. If you're in Perth, we would be delighted to show you around the facility so you can see it. We've had a number of analysts and shareholders as well as observers visit the site, and most of them come away and say, wow, that's a pretty important piece of kit, and they can't wait to see it online. And we'll continue to effectively provide updates to the shareholders as we move towards the commissioning phase. The first one was last 2 weeks ago, and we've got some short-term milestones ahead that will demonstrate even further progress for shareholders.
All right, thanks, Glenn. One more. Are there any Hazer process competitors who use a similar process to produce hydrogen and graphite?
Yep. Yeah, there are. And we're not shameless about it because we think we're better. Look, we are at low cost and we're low emissions. There's a couple of sizable competitors out there. The one that you might be familiar with is a group called Monolith. It's in the US. They do something similar to us, but they do operate on it with a slightly different temperature and technology. In fact, their temperatures are higher than ours. So we're very competitive in this space. The kind of X factors that we bring to this technology is we use iron ore as a catalyst, okay? And it does two things for us that are very important. It dramatically reduces the temperature of our process reaction down to around 1/3 of what everyone else is doing this at. So that's a significant benefit from a cost perspective. The second thing it does is it gives rise to graphitic carbon as opposed to carbon black. And anyone that kind of observes this space of pyrolysis will know that pyrolysis generally gives rise to carbon black, which application generally is only applicable to the tire industry. We have a much broader application because we have graphite. So two really competitive advantages that we offer relative to the market or the competitor space. Going much broader to industry, there's 3 ways of producing hydrogen. There's electrolysis, there's steam methane reforming, and there's pyrolysis, which is us. Electrolysis is very high cost because the energy intensity of that process is 5 to 7 times more energy intensive than what we do. So always going to be high end of the cost curve. Steam methane reforming, the traditional way of producing hydrogen, has one massive downside. Every kilogram of hydrogen produced comes with 11 kilograms of CO2. So it's not a climate solution, it's a climate problem. So we fit into a very unique position and competitive position in this market as a low cost, low emissions provider of hydrogen that nobody else can deliver today in a market that needs disruption. Yeah.
All right, thanks, Glenn. I think we just got time for one more before we have to go. At what point of the CDP development will MOUs become firm commitments?
Yeah, great question, John. Look, we're working. We've got to start somewhere. The MOUs are a great starting point, but underneath all that, and if you read the details of the announcements that we've made, you'll see that we are working on definitive commercial agreements for all of them. And that's venture agreements, that includes offtake agreements for graphite, it includes offtake agreements for hydrogen, and any other commercial licensing model agreements that we've got. So there's a lot of commercial work going on in the background for each of these projects that we've got to consolidate them into firm commitments and firm projects. And again, they're really important milestones and catalysts for these projects as we move towards definitive points. We're the most advanced on Canada. We've been working on those commercial agreements now for some time. We've got a well-advanced license agreement. We've got well-advanced venture agreements, and we hope to be able to give you some positive news on that front in the short to medium term.
All right, thank you very much, Glenn. There's no more questions pending. To everyone, if you didn't get the chance to ask your question, please send us an email. Our contact details are on the final page of the presentation, and we'll get back to you as soon as we can. Before we close out today, Glenn, do you have any closing comments?
I don't. Again, if you're a shareholder and you're an eligible one, please contact the registry office if you haven't received your paperwork. And I'll just reiterate, a hugely exciting 6 to 12 months ahead with the CDP and all of our growth projects. We're funding into the next phase of the company. We want you to be part of this phase. It's why we're offering up our rights issue to eligible shareholders, and we look forward to delivering on the strategy over the course of the next 12 months. Thanks, Hannah.
Thank you, Glenn. Thank you, Mark. And thank you, everybody, for joining us today. Goodbye.
Thanks, everybody.
Thank you.